For our final symposium discussion, please join me in welcoming Laura Riley, a staff writer for the Cornell Chronicle, and Hallie Bonner, the co-founder and partner for New Fair Partners, for a fireside chat about investing in early-stage food startups. Let's give them a warm welcome.
Thank you, Kathy, and good afternoon, everybody. Hope you had coffee from downstairs. It was delicious. So, Hallie, I am not going to do a big introduction. I think we'll get there kind of in my first couple questions. So you've built a career kind of at the intersection of food, entrepreneurship, and investment. What was the path you took to get to New Fair?
Well, I'd say those two things you just mentioned, food and entrepreneurship, have really always been my passion. So I think I'm lucky to work as an investor at, a specialist fund, which New Fair is. We invest exclusively in food and the value chains around food. Is sort of this wonderful umbrella that allows me to work, on the front lines of the food ecosystem and also support these entrepreneurs and founders, not just with capital, but with real, value add as true partners. And a lot of that comes from the whole ethos of New Fair and the backgrounds of myself and my co-founder, Ellie. We have sort of deep expertise in food. We've been working in this industry for mostly our entire careers, the two of us together side by side for over 7 years now, and Ellie, even longer than that, where she had a pretty unique and well-known tenure at Whole Foods, where she spent 10 years as a director there, helping to grow and scale brands like Sir Kensington's and Purely Elizabeth and Who Kitchen. And together, once we met and started kind of joining forces, we worked really across the value chain. We had the chance to help run a co-packing facility in central Pennsylvania, so learned the kind of manufacturing layer of food that is kind of hard to fully understand unless you really lived it on the floor day to day. We helped to build and launch brands in the space, and then we kind of cut our teeth on venture, first at another fund before founding New Fair. But yeah, and just to mention, even before my work in food was kind of always close to entrepreneurial and very early stage, fast growth builds. I was doing that in a different industry where I was early with a tech company and spent 5 years there. Just wearing many hats, growing and scaling the team, but also learning the world of brand and marketing, which I eventually ran for them. I think just falling in love with the power that a brand can have for reaching new audiences. So yeah, a sort of operator path to venture is what I'd say.
So was there a particular question or challenge that led you to co-found?
Yeah, New Fair's thesis is really centered around the premiumization of food and the fact that we believe the customer is sort of ahead of the industry, and that products that are available need to evolve and kind of rise up to meet changing consumer demands. So I think those are the companies that we look to find and support, and I think we also feel that with so much noise and so many new entrants in food CPG specifically, it really takes a true expert's perspective to kind of see through that noise and understand what's going to really build lasting value for a consumer. So we feel like our backgrounds give us, enable us to do that in a very specific way. And I think also just having that operator background where we've been founders ourselves or where we've been part of these builds, it just gives us a deeper understanding of the resilience and grit that it takes to build a food business today. And I think we are kind of able to work hand in hand with founders in a pretty special way because of that.
So for someone who's not in venture, what's your kind of elevator pitch for what you do?
Yeah, good question. We at New Fair, we love food and we're passionate about food, and I think the impact that it brings to environmental health, to personal health, to wellness, and also just the joy and connection that it brings kind of across cultures. So what we really do is look for founders and companies that are offering products and experiences that do that, and then we kind of help them achieve our goals, like I said, with capital as investors, yes, but also with our kind of know-how and background and helping them avoid pitfalls, helping them grow and scale faster, find the right people to work with, all of that.
So I was at the Washington Post for a long time covering food, and it felt like whiplash. Every year or two there would be some new buzzy thing. So it was plant-based, and then it was upcycled, and then it was better for you versions of bad for you food.
Yes.
So how do you cut through the trendiness of the food space
Yeah.
to determine what's an actually good and kind of, long-term idea?
Yeah, we do. We talk about like the sort of fleeting trends that come in and out of food a lot, from the CBD beverages to the high protein everything, and certain versions of plant-based, like you're kind of getting at. And I think what we like to do is just stay like as close to the consumer as possible and try and really understand, like, okay, who's the lasting customer that are buying these products? Whereas maybe in the case of plant-based and some of the buzzier examples there was an excitement around kind of the novelty of that product and the trend around that product. But then as some of that subsided, the customer who would really be a long-time lasting plant-based customer didn't want that type of product. They in fact wanted something made from whole foods that was like minimally processed. So I think, yeah, we try and keep an eye on like, okay, who's gonna be the long-term buyer of this? Who's gonna be new to the category? And how are we gonna get them to switch and avoid some of the pitfalls of just what's trending? Because, customer sentiment, customer behavior is changing at light speed, and it can be dangerous to try and just follow what's trending too closely.
So what kind of distinguishes an investable food company from all this noise that you've just kind of discussed?
Yeah, I think, we look at offering a value proposition that's truly differentiated from the category and really is better than anything else that's out there at the moment. I think, like you said, there's been such an evolution in food, and maybe, in the era of 2007, there was once a moment where, every category was really pretty stale. Everyone could sort of use a refresh or some alternatives in each category, but there's been such an influx of brands that today, like if you're not delivering something that is truly exceptional in taste, in ingredients, in experience that's just like really above the rest, then I think you have to look really closely at that. So we try and be like incredibly discerning on product itself, and then we look for all the components we want to see around that. A really authentic story and vision for the brand, founders that are driven by like a true purpose that gives them kind of reason to be in that category. We look at the TAM and the addressable market, and we want to see that that's growing and has favorable tailwinds. And then I think we look at the team's kind of proven ability to execute, and if they've shown, even if they're early stage, but if they've shown that they can put up some pretty great benchmarks, that's more what we look for.
So in my mind, consumer behaviors have gotten very fragmented. We have people where convenience is the highest high, or price is always a push. Then you have kind of authenticity or sustainability, or there are a lot of different imperatives. So kind of how do founders balance those demands?
Yeah, I think it's very tough, and in addition to what you're saying, I think now consumers just have such high expectations of brands where you have to be delivering this excellent digital experience. Obviously, product is just table stakes, so that has to be fantastic. But you really have to hit on so many different things that I don't think was necessarily the case maybe 10 years ago in order to succeed. So I guess I'd say to sort of combat that, or what the best founders, what we see them doing is really focusing on their customer and their category. Like you mentioned, I think post-COVID with inflation on the rise, like for better or worse, people really stopped purchasing against sustainability. They stopped kind of investing their wallets there, and instead we're looking for value. So we've seen brands like, rise up to meet that demand in order to stay close to their customer. And I think, similarly in certain categories like frozen, for instance, where we have a real thesis around the premiumization of that shelf space, frozen is typically shopped in retail stores. It's a little bit less of like a D2C e-com product, so we see the best brands really double down on retail marketing that's close to the customers rather than investing their attention in becoming like a super buzzy zeitgeist brand. So I think it really comes down to knowing your customer and knowing the category that you're in and adjusting based on that.
So we're in kind of a tightened investment environment or climate. And does that change the kind of businesses that are appealing? Has it made people more conservative or a little more risk averse?
Certainly more risk averse, though we've seen that kind of lightening up a little bit. But yeah, to what you mentioned, I think in kind of late 2022, early 2023, we saw this massive kind of receding of capital where you had seen these kind of what some people call tourist capital enter the food space, who maybe didn't have a huge mandate around consumer food previously, but were drawn there by some of these D2C growth stories and could almost underwrite those businesses to more tech theses and tech outcomes. We saw a lot of that recede, and so the capital available to fund these startups, that pool became much smaller. So I think for the investors that remained, folks like us who've just always specialized and will only ever invest in these spaces, it just meant the criteria to get us excited and comfortable became that much higher. So we wanted to see fundamentals across your business that really pointed to health and serious rigor, things that proved product market fit, like really impressive velocities in your retail accounts or low cost of acquisition on e-com, things that pointed to your ops and your supply chain being especially dialed in, like whether you were at a best-in-class margin at that point or having a clear path to a best-in-class margin. I think some of those categories of a business that were maybe a bit negotiable pre-2023 have just become like table stakes, and you really have to prove out that you have a potentially like very easily scaled business pretty early on to be interesting from a venture perspective.
So the food industry has kind of notoriously slim margins. What advice do you have for founders in trying to build a business that's mission-driven and profitable?
Yeah, that's a great question. I think being prepared to sort of prioritize early on and understand that you can absolutely have a roadmap for mission-driven goals across product and processing and packaging and social impact, but that unfortunately it might be quite hard to hit on all of those immediately at your launch with the impact that you want. So I think looking again at your customer and your category and deciding where should you double down in the early days, and then where should you always have that roadmap of what you're working towards and what you intend to be as you get bigger. And again, I would say that's thinking of venture-backed businesses, but of course there's other paths to capital, whether it's grants or more impact-driven investment funds in which maybe the growth can be a bit more modest and you can really prioritize some of those mission-driven elements in a different kind of way.
So I think of a lot of independent food businesses that have kind of burst onto the scene and then quickly gotten scooped up by a multinational, a Unilever or whatever. Is there a path to success now if that's not the path that you take?
Yeah, I think that's such an important question because there absolutely is a path to success to be a long-lasting, revenue-generated, like profitable, big company that doesn't necessarily move towards an exit. But I think the important distinction is that for venture investors, VCs like us, those exits, whether it's through an acquisition like you mentioned or an IPO, are very important because that's how we see our capital back, right? And then we return that to our investors, which is our whole business, and then we're able to continue investing and raising funds and doing the work that we do. So I think, it's maybe a piece of the conversation that's overlooked in kind of making sure there's alignment from founders and from investors in what the overall goal is. I think I was on a pitch call a couple weeks ago with a family-run business that's been growing at a really incredible clip, hasn't taken any venture money yet, so maybe has grown a little bit more modestly than if they had. But one of the questions from their founders was like, what's your timeline and what are your goals with this investment? Which is an incredibly simple question, but it just struck us because it was one of the first times we've had that conversation so early on or actually at all with founders, because it's almost just assumed that both sides are going after the same thing. But I think, it's really important as a founding team to do that soul searching and say, what do we want to be in the next 10 to 15 years? What do we want our lives to look like from a work-life balance over the next 10 to 15 years? And do we need to be a $100 million food company, or is there another way for us to have success?
So we're seeing a wave of kind of biotech and AI enhanced. There's a lot of new technology in the food space. How do you kind of decide which technologies are likely to be transformative? How do you bet on a horse?
Yeah, absolutely. I mean, we've definitely seen a lot of the intersection of biotech and food, which I think for us can be so exciting because, we don't often get to see so much that's got true IP behind it, or, really incredible clinical trials and research. And I think we talked about this a little on some of our phone calls, but some of that excitement can often be tampered, or you just have to measure it against if the sort of compelling nature of the science is also being met with a commercial team that can go out and sell that story and can market that story. Because I think often it can be hard to find a company that has both going for them at the exact same time. And I'd say that's specifically with a consumer-facing company. Some of that can be easier if you're taking a B2B go-to-market where you don't necessarily have the onus of creating a massive audience and educating them about this problem and selling it through. But yeah, I'd say that's where we get particularly excited, where we see tech that's truly defensible or IP that's truly defensible, and we also see a team that can market and sell it, because that's just as important as it is in any other type of food business.
So can you talk a little bit more about storytelling? Because I think we're at a moment where I see storytelling as something that's almost antithetical to such a science-based push. Mm-hmm. How do you integrate those, or what's the role of storytelling now?
Yeah, I mean, it really is so massive, I think, for younger generations that discover food online and through these social platforms. It's a key way to communicate with them to build your brand. And even if you're doing that at shelf, you do need to be demonstrating what's special and what's different about your brand. So I think, yeah, for the case of some of these more tech-enabled products or ingredients or sort of food as medicine products, I think what's really important and can often be underestimated is the education piece. If you're spending 10 years really close to a scientific build, you're in all the clinical trials and the research, you can almost just assume that a bigger part of the world understands this problem and is interested or briefed in on it than they actually are. So I think just being very realistic about the often uphill battle that can be education to really, communicate what that specific problem is and why they should be trusting you to solve it if it's something that's not necessarily in the vernacular of the day-to-day of consumers.
So what area to you seems underexplored right now?
Yeah, I mean, I think exactly like you were mentioning, some of those IP, highly defensible products, I think there's a lot of investment and attention going to them right now, but I don't think we've seen the massive growth from a sales and a consumer perspective yet, for that very reason that I think often the commercial teams aren't there. So yeah, I think we see kind of processing tech, ingredient tech being really interesting right now, and maybe in terms of consumer groups that's geared towards, I think we've seen a lot in baby and children that's particularly interesting. I guess on the other end of the spectrum, we are excited about one of our most recent investments that's actually the earliest investment we've done, that's a whole meal nutrition replacement meant to sort of replace Ensure and Boost, that's targeted specifically for the aging demographic for seniors, which is just so rare for us to see something that's never talked about. That's pretty novel to be looking at that
huge
space.
demographic bulge.
Yes,
that we
huge
need
and
to,
growing.
Yeah. All right, so Cornell has this huge history in agriculture, hospitality, food science. What can a university like Cornell do to prepare founders more effectively?
Yeah, I mean, I think events like this are so critical and important, and what I think I love about them especially, and what could be so helpful, to do more of, is just that education around the ecosystem of where these businesses will play. So, to say that it's not all about just building the incredible and novel tech, but you have to understand, who the players are at every end, not only your end customer, but who the potential investors are, the retailers, the potential acquirers, and really helping future founders to understand those dynamics, because they are, so specific in different spaces, and I think could often have sort of a big impact in helping younger folks decide where they want to focus their attention.
So on that note, I would love to hear kind of your advice to young founders dreaming up their first food venture. What specific advice would you give?
Yeah, I mean, I think one of the bigger pieces of advice I would give would just to really come from a place of authenticity and something that you specifically are are passionate about, that you just, feel like does not exist in the world today and you have to get out there. That overlapped, or to come from a place of a problem that you have yourself that you don't see solved and you think might be a problem for many other people. Because I think, especially younger generations are so discerning on authenticity today, like they can just tell from a mile away if your brand is manufactured or too self-serving or whatever it is. So I think for that reason, and also because, you'll be marketing and selling this brand for the next 10, 15 years, like if it is truly something that's authentic to you, that rings true, it will just be like a endless, fountain for that storytelling, for that content, whatever it is. And that's what really leads to, I think, more undeniable, like infectious brands. So yeah, I'd say really coming at it from that perspective versus what I sometimes can see or hear of, or you mentioned like the AI-enabled tools of kind of trying to reverse engineer into what is an exciting category for investors, or what is an exciting category based on trends. Like I think that often leads to kind of diminishing interest for us.
So access to capital remains difficult, or kind of inequitably distributed. So for your company or for others like it, what is done to kind of level the playing field, or give underrepresented groups or women or people of color access to capital?
Yeah, I mean, I think it definitely remains very much unevenly distributed, as you said, but maybe are making some slow movements towards improvement there. I think, Ellie and myself are female fund managers, which is an even smaller fraction than I think at the founder level. And to me, having underrepresented folks in those positions is what helps lead to investment, more equitable investment. So, over half of our portfolio is underrepresented founders, and that's just how we invest. That's just how we think it's smart to invest in consumer businesses. Like, diverse founders are going to be the ones to reach diverse audiences, and so we always kind of think of it from that sense. But yeah, having more diversity at the manager level, I think, is key, and there's obviously still a lot of work to be done.
Great. And I'd love to close out the session with a look at what is success for your business 5 years from now. What does that look like?
Yeah, good question. I mean, we're coming to the end of the investment period of our first fund. The portfolio is up around 10 companies today, and I think for us, success looks like, we've got an eye on our second fund, and just being able to continue doing this work at bigger and bigger scales, and investing in more companies, and kind of helping those founders who are looking to improve the lives of consumers through food. So yeah, for us, that comes from subsequent funds and continuing to kind of double down on the strategy that's worked.
Wonderful. I would love to thank you for all this time, and enjoy the rest of your afternoon, everybody. And thank you, Hallie.
Yeah, thank you so much.